Hi there, it's Bill with Smart Trades. It's November 5th around 10:40 a.m. Pacific time, and today we'll take a look at the stock indices as well as the currencies and crude oil. Right off the top, here's the Dow, and here's my longer term count, which basically has remained unchanged on a longer term basis. Obviously, the market's gone higher on a short term basis than I was expecting. That said, the breakout to new highs is not a surprise, as we had identified this triangle. And the idea behind triangles is that they do break out in the direction of the trend. And indeed, one of the interesting components of a triangle is that oftentimes the breakout will equal the distance of the base of the triangle. And as you can see here, we've got about a 400 point base on the Dow, and so far we've got about a 400 point breakout in very rough terms, just eyeballing the triangle measurements and the breakout from the apex of the triangle. Some folks have asked me if going to new highs invalidates the ABC count, and in fact it does not. I'd like to quote from Robert Prechter's great book, The Elliott Wave Principle, and in that book, under the section on flats, 335 flats, he says in a regular flat correction, wave B terminates about at the level of the beginning of wave A, and C terminates a slight bit past the end of wave A. Now, however, flats can be what we call expanded and contain price extreme beyond that of the preceding impulse wave. In other words, beyond the April high in our case here. Elliott called this variation an irregular flat, although the word is inappropriate as they are actually more common than regular flats. And indeed, I've found that to be the case as well, at least on a short-term basis. You oftentimes will get, or I should say on a moderate basis, you will get some exceeding of the previous beginning of the A wave. Anyway, long story short, this is not that unusual to go to a new high, and some of the indices haven't even gone to a new high yet, although the S&P, the NASDAQ, and the Dow all have at this point. The Russell has not. Anyway, let's go on a bit. Here's the S&P chart, and indeed we've made a new high. We've taken out the 1220 area, which was the previous high, and we've gone up to approximately just shy of the 1.62 times A. In other words, here's our A wave up, B wave down, C will be 1.62 times A at approximately the 1230 mark. That's a typical relationship. And again, having a moderate new high above the April highs does not necessarily negate the flat pattern scenario. Also, I'd like to point out the rally off of the July low to the early August peak, to my way of thinking, best counts as an ABC rally. The implication of that is that this entire pattern off of the July low to our current price highs is going to be corrective. There's a variety of ways, and folks can argue about the interpretation of the internals of this wave I've got labeled as C. This could be a double zigzag or whatever, and I won't argue that at all. That said, triangles are pre-termination type patterns. Now the question is, on what scale? So, but that said, the combination of the fact that we are entering an area of typical internal Fibonacci relationships, we're also into an area where a B wave would be likely to peak. We've got divergences all over the place, including the ADX. Volume has improved a little bit on this triangle thrust, and that's not atypical. That said, I think we do have somewhat higher prices short term, and I'll get to that in a moment. And here's the Russell based on the IWM. And again, we haven't quite reached the previous highs. They're around, I believe, 74.60. Excuse me, a rally up above 76, to my way of thinking, would negate the flat scenario, at least on a short-term basis, the Russell. So we've got a target there around 74.66. and a move above 76 would make me reevaluate the entire pattern basis the Russell. That area that negates this count, or at least makes me reevaluate it, is around 11,600 on the Dow. And here you can see my projected breadth ratios. We have the count breaking out of the triangle. We've got our ABCDE triangle wave 4, and from there I believe we've got 1, 2, 3 up. We need a fourth wave down and a fifth wave that should falter below 11,500 ideally, and again not go above 11,600, and then break down. And breadth should diverge on that peak if indeed it's a peak. Here we have the S&P cash, again the same count. So far I'm counting this as 3. We need a 4 and a 5 to complete the pattern. And here's the Russell. The Russell is a little less clear on a short-term basis, but same scenario I believe. I think we need to come back a bit and then rally to a new high and have a breadth divergence on that high, ideally to put in a top. So just backing up a bit, S&P target around 1230 and 7440 or so on the Russell. Here we have the Euro FX. Again, our triangle pattern, not quite as clean or detailed as the S&P and the Dow. That said, a pretty clear triangle pattern to my way of thinking, and a breakout obviously. I tend to think that we need a little more upside in the currencies, particularly the euro obviously. That said, if we get an impulse down and a corrective rally that fails to take out the high of the move, I would look at the possibility that the euro is turning around. And just the opposite in the dollar. Again, we have the triangle, we have the breakdown, a little bit of an impulsive rally off of the low. So if we get, more of an impulse up, a corrective decline that fails to make a new low, I would look for the possibility that the dollar and the euro are reversing. Gold made a new high. It just keeps on trucking. That said, we are up against resistance in this area around the nice even number of 1400, and so we shall see. That said, there's no pattern that I see that indicates a high yet. Certainly there's no impulsive action to the downside, so let's wait and see on gold. Now here's a really nice pattern in terms of Elliott wave, and indeed crude has been carving out very similar patterns on various degrees of scale. The bottom line is I think that this entire rally off of the I guess that's the May low is an ABC up. You have kind of a disorganized 5 waves up within C. It's possible to count that a variety of waves, but the bottom line is I think it's an ABC. I think it's close to termination on a intermediate term basis. And on a short term basis, here's our triangle that is showing up also in crude. And from there we have what appears to be 1, 2 up, perhaps a third wave, volume divergences. I think we're probably going to see a little more upside in crude, just like we may see in stocks. That said, it looks like we're very close to, again, possibly a short-term peak, as well as an intermediate-term peak, and the implications of that are obviously negative for the economy. And I'm not looking for a crash either in crude oil or stocks, but a decent decline is certainly a possibility. And that said, we're looking at, if this count is correct and we do have an irregular flat, or expanded flat if you will, in the Dow, we're talking about a decline under 9,000 in the Dow. So one step at a time as always. Like I say, short term I'm actually looking for slightly higher prices, and then we want to see conclusive evidence of a top before I would call it. So anyway, hopefully that makes sense. Hopefully you've had a great week, and look forward to a great week ahead. Bye-bye.